Again, a warm welcome to today's webinar on making tax digital. This is the biggest change in the way you will be reporting your self-assessment over the next coming year, the change that comes in, and you will see today what will happen. Before I start, I think the first thing I want to do is run a poll and run a poll to see and understand how much you know about making tax digital, just so that we can get a sense of who's on the call and um, where to sort of pitch the webinar as well in terms of understanding. So I've put the poll out on how much do you know? I've heard of it somewhat. I know how it works and how it affects me. Never heard of it. Just get a feel of it. I'll give it a few more seconds just as people start completing it. We're halfway there. So again, if you haven't voted, please do vote. It just helps us um, understand. This meeting will last about 25-30 minutes. Again, then it'll open up to questions. So again, the next bit that we'll go through is the agenda. So yeah, if you can vote, I'll close the poll in about 10 seconds. 5, and thank you very much. So I'm going to share the results so that we get a feel. About half of you have heard of it but don't know the details. There are people that understand the basics, which is great. And we've got one person that says, which is brilliant, absolutely. I know how it works, and I'm hoping that's one of our team members. And I've never heard of it. So a great mix, but most of you have heard about it but don't know the details, which is what we are here to share. So let's talk about the agenda. This meeting is being recorded, so we will share the recording at the end. Right, so the agenda is we're going to take you through the overview of making tax digital, what it means, what are the requirements of making tax digital for income tax, other matters, what it means for you, penalties and fees, and then we'll leave some time for question and answers. Right, so making tax digital. Just give me a second whilst there's a lot of screens open on my desk. So making tax digital, what is MTD? This has been a buzzword around within the accounting industry for a number of years, but making tax digital basically stands for, sorry, MTD basically stands for making tax digital. And MTD for income tax is the next step in the MTD timeline for HMRC. So we've had MTD for VAT, which has been going on for about 6 or 7 years now. And this is the next step, which is coming into effect from April 2026. So it comes into effect from 6th of April 2026. That's in a year's time. And it introduces quarterly submissions of income and expenses data to HMRC. Who does it affect? Well, it's mandatory for those with qualifying income of over £50,000. So that's income, not profits, turnover of £50,000 or more. And qualifying income includes self-employment and property rental turnover. So if you've got self-employment income or rental income, which is more than £50,000, you will be affected with this. And what does that mean? Well, in simple terms, you've got to maintain digital records. So digital records need to be maintained for accurate reporting. There is one change that is not a change. There is no change in the payment date. So you will continue to pay taxes on a 6-monthly basis for those of you that are paying payment on account. So that's 31st of January and 31st of July. The timeline. So we're here on April 2025, well, in May now, but the beta phase for MTD for income tax opened up for early adoption in April. And from April 2026, it goes live for sole traders and landlords with combined income of over £50,000 in 24-25. So if in the year up till March 2025, your combined income from turnover from your self-employment or your property is more than £50,000, you will fall within the making tax digital regime. So if you recall, we had last year everyone's year ends starting to change from whatever they were to 31st of March or 5th of April. So all individuals had now or have now got the same year end. That was really the first phase in readiness for this. And in April 2026, then we go live with mandatory reporting for the individuals affected. In April 2027, MTD for income tax becomes, well, the threshold lowers. The threshold lowers to £30,000. And in April 2028, the threshold goes further lower to £20,000 of income. MTD for income tax for partners in an unincorporated partnership. So partnerships have not yet been affected yet. So there has been conversations with HMRC about bringing this in. We don't know when this will happen, but it is on the agenda for the government. And if the income is below 20,000, the government has indicated that you will be required to report on a quarterly basis, but at the moment that date's not been confirmed. For those of you that have had a conversation with me in the past, you will recall that the original limit that was set was £10,000. But then we had the elections, and I think the government decided, let's push this back. And they finally saw some sense in having a limit of £50,000 initially. So again, just to give you a heads up with that. Finally, the next bit on the agenda is MTD for corporation tax, which is going to be brought into effect as well. So limited companies will also get affected with quarterly reporting. Again, the date for that's not been confirmed. I know there's some questions. There is a Q&A box in the near the chat box, and at the bottom right, you should see a question and answer. Please do put them in, but there'll also be an opportunity to ask questions at the end once I've gone through the slides. Thank you. So I've talked about MTD and what it means and when it, what the timeline is. But what are the requirements? What are the requirements for MTD income tax? Well, the first requirement is for you to sign up with HMRC in terms of, yes, I fall within this, so let's sign up under this different portal that the HMRC has. We then have to maintain digital records. And by digital records, what does that mean? Well, it's to store your accounting records like income and expenses, invoices digitally using accounting software or spreadsheets that are MTD compliant. And what that would mean is on a quarterly basis, effectively it's the date, the amount, and then which category that income or expenses falls into. So is it the expense of paying a wage, or is it the expense of motor expenses, or is it income in turnover? And what has to be included within quarterly updates is a summary of your income and expenses, not adjusted for accounting or tax. Just bear with me 1 second. Just 1 second. I hope everyone can hear me. I know there's a question about not being heard, so I think Palak's going to respond to that separately. Sorry. So what is to be included in a quarterly update? The quarterly update is you've got to include the income and expenses with no requirement for making accounting or tax adjustments. You can if you want to, but there's no requirement. And income and expenses in categories as stated to the left need to be included within that. So it's not transactional data. It's a summary of the income and expenses. So it needs to be put through in those particular sections, and it needs to be reported as one line item multiple line items rather than multiple transactions. It's basically similar to the information we are doing. So those of you that are eagle-eyed and look at your actual tax return submissions, they have a number of boxes that need to be completed when you're self-employed. And a figure goes into the box, for example, for car and travel expenses. That's the figure that they want now on a quarterly basis. So we talked about signing up and maintaining digital records. We then also have to file quarterly returns for property income, foreign property income, and each business. And let's talk about that in a bit more detail. So a taxpayer with multiple business, he's self-employed or she's self-employed, they have UK property income, foreign property income, need to submit every quarter a quarterly update on 7th of August, 7th of November, 7th of February, 7th of May, or by those dates. And then finally a return which includes other information by the 31st of January, along with payment of taxes to go with that, right? The allowances and the adjustments would be made before the submission of the digital tax return by the 31st. So you could sort of put in your income and expenses, and then at the end of the 4 quarters, when we prepare the digital tax return, we would be making the allowances and adjustments as and when required. So, you sign up, you maintain the records, you file quarterly, and then the final bit is to file the digital tax return. That's pretty much what needs to be done. When does this need to be done and for what periods? So the first quarterly update that needs to be done is on the 6th of, well, it's for the period 6th of April to 5th of July 2026. Or with an election, which we can make on your behalf, we can use calendar dates. So it becomes 1st of April to 30th of June 2026. That first submission needs to be made 5 weeks later on the 7th of August 2026. So you've got pretty much the whole of July to gather, compute, work out your income and expenses, and submit that to HMRC. We then go into the second quarter, which is then for the period of 6th April to 5th of October 2026. Or with the election, you'd go for the 6 months from 1st of April to 30th of September. So it's a cumulative number that then needs to be submitted again 5 weeks later by the 7th of November 2026. Similarly, quarter 3 will be a 9-month period to be submitted by the 7th of February 2026. And the fourth quarter, which is for the entire year, by the 7th of May 2026. With the final declaration for the 6th of April to 5th of April 2026, or the 1st of April to 31st of March 2026, needs to be submitted by 31st of January 2027. But in this final declaration, what also needs to be included is items like your savings income, your dividends, your partnership income, you may have employment income, you have the high income child benefit charges, You could have your pension contributions in there, your VCT investments, EIS, so you get your relief. So those, all that needs to be included within the final declaration. Fact, in essence, your tax return as normal. Right, I'm now going to go back into a poll. And if I can get that on screen, it is, what is your biggest concern now that you know a little bit more about MTD? What are your biggest concern? Is it understanding the rules and requirements? Is it choosing the right software, the cost of compliance, um, keeping up with deadlines? And don't forget, you can choose a couple of these at a few or all of them if you need to. So I'm going to run it for a couple of minutes, well, 15, 20 seconds. Again, if I could please urge you all to vote so that we can get a feel of what it is that we need to sort of discuss and talk to. Brilliant. I'm going to give it we're halfway there, so if we can answer, a few more people can answer, I'm going to give it another 10 seconds. 5, 4, I'm going to share the result. So again, keeping up with deadlines and cost of compliance, fairly even spread actually. So absolutely, that you can see clearly that the compliance deadlines are just going to be relentless, and they'll keep coming. I'm going to stop sharing this and head back to the webinar and talk about some of the other matters that come into play. So HMRC will issue a formal notice to mandated individuals after the 31st of January 2026. So you will not formally know whether you're affected until after 31st January 2026, once the 2024-25 tax returns have been filed. However, those that are on the webinar today know that, or we've invited clients that are affected onto this webinar because we know that they will be affected based on their earnings. We will have to sign you up for MTD for income tax as agents. And HMRC may send a letter to you. So we've seen some of these letters come through to our clients in spring 2025, so around now, saying that we believe you may be affected and be under MTD for income tax. So if you get those letters, yes, you're probably going to be affected, but it might not be accurate, as this is based on your 2023-24 tax return, which included a longer period in some instances. So do watch out for that. But I think for those of you that are on the webinar, we have reached out to our clients to say, please do attend so that you know how you are affected. Can you leave MTD? Absolutely, you can leave MTD. But the only provision is if your qualifying income was less than 30,000 in the previous 3 tax year, and this is likely to be dropped to 20,000 pounds. So you can see that the thresholds are very low, and a lot of the individuals will be caught out with this. For me, the most important part, what does it mean for you? Why are you here on the call is to understand what it means for you. What it means for you is, I think the first thing is you've got to review your position. So you can organize a call with myself or my team with us to review your business structure and to see if there are any options available to you to sort of mitigate this MTD for income tax reporting requirements. Consider your internal processes and procedures. So again, look at how we can look at how you can make yourself a little bit more efficient. And review your record keeping. So how best can you review your records to ensure that they are met with the digital requirements of MTD? Um, Now, this is normally where I've sort of tried to break this down into a more manageable way. Because again, I appreciate that various clients are in various stages of their business life. But the the best way I saw this was to look at that critical event. When is the first filing due? 7th of August 2026. And off the back of that, work backwards to see what you need to do to make sure that you are compliant by the 7th. And when you do your first filing, that's when you are ready. So the first thing we need to do is we need to update records from April 2026 to June 2026. So we need that quarter's records. But in order for us to update from, or for you to update from April 2026 to June 2026, you need to obtain the opening balances. So what was your position as at March 2026 for you to then carry on? Which means, in theory, the March 2026 accounts must be finalized shortly after 31st March 2026 so that you're ready by the 7th of August to ensure that that first quarter submission's done in on time. So, and in order to do the March 2026 accounts, the March 25 accounts must be finalized. And if possible, get your tax returns filed earlier because the earlier the better. But in order to do the March 26 accounts, we've got to do the March 25 accounts. Which means when you're sending us the records from April 2024, so last year to 31st March 2025, rather than send it up to 31st March 2025, why not just send it to us till date? And then every quarter thereafter, send it to us as well. Now, we as a firm will be sending you reminders to say, send us the records to 31st March, but we will also be requesting you to send us records to date and then quarterly thereafter as well. So every quarter you will be receiving an email from us to say, please send us your quarterly records as well. The third thing that we've got in terms of matters is to simplify your life. So one of the things you could do is set up a separate bank account for each of the business that you operate, a separate bank account for all the property income, if you don't already do this, and foreign property income as well, should you have any. What you should avoid doing is mixing transactions. So again, trying to get into that discipline of using the right bank account to pay the right expense out of. And finally, consider joining the pilot scheme that's available at the moment. And what this will do is it will help us and help you get into the rhythm of reporting to us on a quarterly basis and reporting to HMRC on a quarterly basis as well. Moving on to penalties. Again, there's penalties for late filing. So there's one penalty point for each late filing, and after you reach 4 penalty points, there will be a £200 fine being applied to that. And the 4 penalty points, or the penalty points, drop off 2 years after the first or after the missed submission for that quarter. So for example, if you miss the 7th August one, you'll get 1 penalty point, but that will stay on your account for another 2 years, after which it will be dropped, providing that all future submissions are made on time. Whilst I said that there's no change in the payment dates, so the payment dates being 31st of January and 31st of July, there have been changes to the late payment penalties. So again, there's no penalty if tax is paid within the 15 days of the due date. Again, this is for the purposes of penalties rather than interest. So interest will still be charged. But then there is a 3% of the tax outstanding every 15 days. So after the first 15 days, you'll have a 3% penalty, a further 3% penalty of the tax outstanding after 30 days, and then an additional 10% per annum penalty on a daily basis from 31st or from the day 31 from when the tax was due until the tax is paid. There's also a £3,000 penalty for HMRC to impose for failure to keep digital records or for breaking digital links within the functional compatible software. But at present, there's no mechanism to charge this, so we don't know how HMRC are going to be applying these penalties. And similarly, there's no penalties for late quarterly updates during the beta phase. So during the pilot phase in this year, April 2025 to March 2026, there is no penalties for late submission. So again, an opportunity for you to join the beta to see and get into that rhythm of submitting on a quarterly basis without incurring penalties at present. Fees. So I guess understanding our fees for MTD, very simple. Our fees will vary based on the complexity of your tax situation, and we'll be discussing these individually with you. However, it will not be 4 times the current fees. So it's not like we're going to charge you 4 times the annual fee to submit things on a quarterly basis. And one other thing is if you do decide to join the pilot, so from April 25 to March 26, with or without filing, so if you just want us to do your quarterly accounts whilst we are in this sort of transition phase, we will not be charging you an extra fee for 25-26. Again, that's to help you get into that rhythm, but also for us to help us get ahead of the game. Right. What kind of support would you like from us going forward? So I'm going to raise another poll just so that we understand where we are with our clients and what kind of support they need. So again, the poll's out. Hopefully, we can see some votes to come in. Give it a few more minutes. Again, if I leave it for another 15 seconds or so, if I can get everyone to do vote, so it will help us also with our material in terms of where to target what our clients need in terms of support, so we can send the relevant documentation out as well. Last 10 seconds. 5. Any more votes? Last few. Thank you. So I'm going to share the results so that we get a feel of, right, so we've got a fair mixture between one-off consultation to get started, and I'd like you to handle everything for me. Right, going back to the event, before I open the floor to question and answers, again, just a little bit of kind of things that we're doing within the organization. So I was talking to a number of clients, and something that came across was, oh, I wasn't aware of this service that you offer. So again, other than the accounting and the tax returns, compliance work, these are the kind of things that we do.